Hi everybody, this is Gary Dean with Sentiment Timing, and this is our technical video report for Sunday, March 25th, 2018. Hope you guys are having a fantastic weekend, and let's get started. Everything has really been working as planned, and it's kind of amazing, really, how everything has worked out, from time patterns that Woody has put out to patterns, target patterns that we had in place, as well as wave counts. And it's predictive analytics, but it's not through software. It's through years of Woody's doing this for over 40 years and matching that up with sentiment as well as his technical timing dates. And then we just kind of fit in the technical aspect. And from really, if we think about it, we were looking for the top for another clipper to the downside all the way in February, and the time period was between March 8th and the 15th, and it fell right into place. And from there, once we took out the 27.79, that triggered the short side, and then from there it was just shorting bounces. And then when we started coming into support, I just told you what I was doing. I like to layer out of positions, and I told you I was not going to be upset at all if we came down to the target, because it's just the way that I manage my trades. It takes stress off of anything that I have open, because if the S&P bounced, then I was able to just to re-short those shares back, and if it didn't, I was still holding on to a portion of the short position to ride it down. And I continued to do it. I didn't add anything because we never really got up to target areas that I was looking to re-short. And now we are approaching this target that again was put in place really on this right around here when we started bouncing, and we left the door open that they could have came up and tried to close this gap before coming down, because that's the way this pattern was reading, was it could come up and then down again. But this has always been the target. And right now, just from this clipper, from this rally, and this is a very conservative number right now, because we were depending on when people closed their short positions, I meant they could have taken them all the way down here, or gotten long from these areas when we called the top the low. But right now it's 610 points, and that's going only from the February 2nd drop here. And we know what we're looking at as far as time period. We know when to start looking for the low, but we're also, as far as price wise, again, this is not when you start adding to the short position, because what you're doing is you're jumping in with the majority, because on Monday we're going to find out that the sentiment is probably going to be at 0% after, or 1%. I'm just guessing. Woody has these numbers, not me. But typically when we get these big moves, sentiment gets really low, and that's not a buying signal. It just means that people are all jumping on that side of the sentiment wagon, and that's when we start layering out of the short positions, and then we wait for the technical turn date to come on the upside, and from there we start trying to find out where the low will be. And right now, like I said, we're right at the 200-day moving average, so if they open up down tomorrow, they're going to come down, most likely test this low at the 25.33 area, and then from there, if they don't hold it up there, then then our target is going to be all the way down at the 24.70 level. So as we start approaching these important support levels, like one right here, we could bounce on on Monday. But the thing is that we don't have any bullish divergences. So even if we bounce tomorrow, most likely it's going to go right into this resistance area and get held down, and then come back down again. So if they pop it up and we see a move somewhere into the anywhere from the 26.31 all the way up into the let's say the 26.50, this would be your shorting area. But again, it's that we've made the points on this move right now. So to me, I may add some, I may just manage the half and then wait for you know, the next turn date and start, and then from there look for where the support areas are, and then wait for a buy trigger, just like we waited for the short trigger here, and then go long. Because what happens is when we find that low, and again, I don't know when it's, we know when to expect it when as we approach that time period, but I don't know if it's going to be here, or we're going to go all the way down to the 2470 area, somewhere in that level. But when it comes, what happens is when we get that bounce, everybody's going to fight that bounce, and they're going to short it because they're going to be on the side that we're crashing, and they're going to, you know, not really pay attention to this right here. And from there, you get these massive moves. So right now we're still, you know, I'm more on instead of shorting rallies right now, I'm more in the sense of managing my open positions, and I may add some, but I'm not, you know, we got the majority of this move right here. And again, there's that old saying, bulls make money, bears make money, and pigs get slaughtered. And that's why, you know, for me, when you get a huge point move and we're on the right side of it from all the way up here, you don't want to keep adding and jumping on that side. I mean, you could if you're fast with the trades, but to me, I manage them. If we start hitting these targets, then I move to cash. If we keep going down, so be it. I'm waiting for the next buy. I would be waiting for the buy trigger, and then I'll know where to put the stop, and it may take a couple tries. But something that I can see playing out is maybe we do get a little bit of a rally on Monday, just because of the you know, where we're landing right here. No guarantee. If they don't, then we most likely are going to come down and test these levels. But what I can see is have a bounce take place, and then from there a secondary low, and that would be into the turn period that Woody would be expecting, and then from there we just look for where the targets are. So like I said, everything is really going as planned, from this drop to this bounce to this drop, and we just manage. Like I said, volatility is the key to this, and I know it's driving a lot of other newsletters crazy, because now they're all going to be jumping on, you know, we have to just be bearish on this market. But we know that when sentiment is going to get to extremes, and we're expecting a buy the dip period coming in during the next technical turn time that Woody's looking, again, they're all going to be caught on the wrong side, and that's why so many people hate volatility. And for us, we love it. And like I said, just we want to manage our positions. So a bounce on Monday, it would make sense. I would keep an eye on you know, anywhere from that 26.11 all the way up to the 26.43 if they got that high. And from there, if they push above it, then, you know, you don't want to get aggressive short. But what's going to happen is if they come back down, that will be the secondary low, and from there, most likely to buy the dip procedure. So this was the target. We still have a little bit more room. Keep an eye on that 25.64. If they lose that, then we're coming down to test this 25.33. Again, if they lose this, then 26.70. For the bulls, what they have to do to get themselves out of harm's way is the first resistance area, 26.25 up to the 26.46. If they get above that, then from there we could see a move come up to the 26.91 level. I don't think it's going to get that high, but I'm going to, you know, the market's going to do what it's going to do. We'll keep an eye on it, but this would be the first signal that they are going to try for the next resistance area. If they get held down, then again, we're looking into this target area to come, and that's anywhere from this you know, the 25.65 down to the previous lows of the of that 25.30 level, and then below that 24.73. So with that, we do have, you know, somewhat of a little bit of a bullish divergence on the 15-minute chart, but this move was pretty big. So to me, down and then maybe up, or up and down. Like I said, we just really want to manage our positions right now, and I think that the first, if you're going to be really conservative, you can move your stop to, you know, the 24.64 level. I mean, I'm sorry, the 26.60. It's up to you how you want to do it, really. But if we get above the 26.46, this is going to be a technical buy. But it's not the buy that I'm anticipating that you want to hold on to. It's just more of managing your positions right now. And if you wanted to be conservative, that's where you would put it. But like I said, it's not going to be the buy the dip time period that we're looking for. We know when that's coming. When we approach that area and we see where support and resistance is, that's where we start looking for the technical buy for the swing trade. So with that, Have a great rest of the weekend, and I'll talk to you guys tomorrow.